Welcome back to Primary Source China Investment. This week we're on show Q7, and Pengwo and I are talking about the big news, the China GDP numbers, and how China got there. And it's important to point out, and without going through a Econ 101 class, what makes up GDP? Remember, it's consumption, government spending, public and private investments, and then net exports minus imports. So let's break that down a little bit to see where China achieved this 5% GDP growth. And remember, fourth quarter was the biggest number out there, it was a 5.4 print. And we won't bury the lead. It was all about exports, but let's get into that specifically. Before we get there, let's talk about consumption. Pengwo, you and I have talked about it a lot. Chinese consumer is still very patient. They are not making those big expenditures. I know China is trying to implement some coupon programs to try to front load some of the consumption, but the consumer seems to be very patient right now. Is that your thought?
Yeah, I think right now the two things everybody knows the consumer confidence and get dropped, and also the disposable income and employment the things get worse. So the key thing is that reach the bottom or not reach the bottom?
Yeah, you can
So.
see the retail sales growth in December was 3.7%, and it's been bouncing along those kind of numbers for some time. It looks, it's hard to look at that chart and see any real directionality. And the other thing about consumption is property has been so awful that the consumer is staying away from real estate. And I don't think that changes anytime soon. But
Yeah,
hey,
real
maybe,
estate is don't forget the real estate index. If we check that one, it take the 1 year to give the warning and reach the peak. I think at least from right now, the worst bottom point is August in the last year. And
mhm.
for the past 5, 6 months, it looks like get stable and get up.
Mm.
So looks like it's already get out of the worst scenario.
Yeah, it's just got to go a long way back. You
Oh
know,
yeah, that is a big cycle, real
yeah.
estate always.
So that's where the consumer is. Let's look at government spending. So the National Bureau doesn't break this out very cleanly, but we can see for much of 2024, the monthly data was nowhere near 5% growth, right? If we're trying to back into that 5% number for GDP. So it's really been around 1% growth for much of the year. Um, but let's not forget, and that includes a lot of the stimulus that was announced. But there was another piece of stimulus that was announced for 2025. A 3 trillion renminbi special treasury bond will be issued. That would be the largest on record. So we might see that in 2025, and that would certainly go a long way to getting China the GDP number it needed, given the size of the economy. So 2024, it wasn't government spending that got China there. The next part is investment. And here we can see there is some contribution to GDP with state-owned fixed asset growth about 6%. Just glancing at the chart, it does have a negative slope, but that only implies that growth is declining. There's still growth, it's just increasing at a decreasing rate. But now we finally get to exports minus imports, and this, to the moon, right? I don't know. I don't have any other expression. 1 trillion exports minus imports. That's a massive number. Remember, China's economy is an $18 trillion economy. 1 trillion on 18 trillion is 5.5%. And look at the slope of that. It's truly amazing. Now, there's been some speculation that a lot of this was front running for the Trump tariffs. I don't know how true that is. So that would be, bringing up some future exports early. But China is not China's trade partners are everybody, not just the U.S. And it's only been the U.S. that have been pounding the table with tariffs. What's your thought there, Pengwo?
I think for Trump, I'm not surprised that he can make any surprise to the people. Remember, in the last time, global traders watch his tutor to make the trade. whatever. He can make the stock market up and down over the night. So it could be positive and could be negative. So I just keep it neutral.
I think that's probably the best way to do that is to remain neutral because as we've talked about this a lot. Global trade continues to grow. It doesn't grow 5, 6, 7%. It grows more like 2, 3, 4%. But global trade continues to expand.
Yeah,
Uh,
in the last year, if we see the details of the import and export, uh, China-related one road and one belt countries, they take the more than 50%. That's really the first time beyond the 50%. And from the import, the highest part is mechanic and industrial or related product and merchandise, raw materials is probably around 5%. For the export, the biggest part is still like the high-end manufactured product,
yeah,
grows
finished product. Yeah.
almost 40%. Industrial robot grows 45%, and the related clean energy grows almost 70%. So
Yeah.
that's really amazing.
Yeah, it's the final chart here is the change in exports and imports, and this is the real story here. China's exports continue to fly ahead. Imports are much more muted. I mean, imports grew at 1% in the latest reading. Exports grew more than 10%. And you can see this gap uh, exists for most of the last 2 years. So it's
Yeah.
the strategy that China employs. It's an export economy. It doesn't look like that's going to change. But is that sustainable? I think that's the question I'm kind of grappling with, right? Prices continue to fall, the currency continues to fall, which means China Inc. will have to export more volume to achieve the same currency amount. Furthermore, um, all sorts of new and creative tariffs are coming up, in places that you haven't thought about, right? Or maybe Europe and maybe Latin America and these kind of places. So I don't know if this is sustainable. I mean, maybe China exports its deflation and the world gets cheaper goods. Is that a long-term strategy? I don't know. I don't know if it's sustainable. That's what I'm grappling with right now.
Yeah, I would like to see it's more like the trend is more focused on high-end, complex, robot-related industry, and also integrate with the AI and a lot of the new technology integrate into the traditional product and make it have the totally new functions and give the unique competitive advantage. So it's not to see it will be end. It looks like it's just starting or in the progress.
The world is making some decisions about importing from China. There's no doubt about it. It is looking at solar, it is looking at EV, it's looking at other leading technology areas. They're saying, do we want all of this Chinese product? Even if we don't make all of this, even if we don't make similar products, do we want all of these products? And
Yeah.
there's going to be cases about dumping, and this is going to go on and on and on and on and on. It's going to be something that we have to watch. But China's consumer has to sort of step up to the plate as well. China cannot continue to just export everything that they make. I mean,
Oh yeah, I agree. Yeah.
at some point,
Sooner or later,
everybody
they
around
will
the world
reach
says,
the
"Fiala."
balance point. Yeah.
Yeah, so I think that's the balanced trade that everybody's looking for. Well, we're going to leave it there for show Q7. Thanks for tuning in, and we'll see you next week.
Thank you.